Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Tuesday, February 5th, 2008. Well, I've got a ton to go over today, so I really want to get things started right away. And we're going to start right away with what happened this morning, which triggered the sell-off that basically continued all day long. And we saw the indexes today closing down about 3% across the board. And believe it or not, it's the two-day worst day for the Dow. For two consecutive days we've seen since, I believe, July 2007. So keep that in mind, folks. It was a big down day across the board. The Dow was down 370 points today, the NASDAQ down 73, and the S&P was down about 44 and change. All 3% across the board, give or take. Now, what happened this morning to trigger this? And this is a very interesting situation, and I found it fascinating this morning. You know, this morning it's 8 o'clock, kind of getting situated for the day trading in the chat room and getting situated for the swing trades in the chat room and looking across the markets, and the futures were down, but nothing major, down 3 points on the futures, on the S&P futures. And when I talk about futures, I always mean the ES futures here, so keep that in mind. And we saw around 8:30 the futures start to dip a little, but there's no economic news to report until 10 o'clock. 10 a.m. East Coast time here, we had the ISM number scheduled to be reported. Well, the futures start to drop here, and drop pretty fast, actually, to the point where within a few minutes they were down as much as 10 points across the board. And on the futures, that's a pretty steep drop. And all of a sudden, you know, we hear from the media that somehow the ISM, which is a manufacturing data number, a non-manufacturing data number, had been released or at least leaked out. And what they were going to do was release the number instead of at 10 o'clock, basically around 9. It actually came out about 8:55 in the morning on the East Coast here. And they were going to release it early because it had already been leaked out, apparently, and so forth. Well, that's the first time I can remember that happening, folks. This is just weird. In any case, they released the number at 8:55 in the morning. The futures got crushed, and we'll show you that intraday here. Right here is where it got released. So here's the ES future intraday, okay? And right here, the number comes out right before 9. You can see the volume picking up right here, right before 9 o'clock. Here's the big candle right here where it was released, and that was about 8:55 in the morning, and the futures just tanked on that number. And the selling just continued all day. There's no doubt about it here, folks. It was a constant sell pressure all day. Every bounce was met with resistance. Every bounce was sold, and bear market action to a T today across the board. Now, I want to show you some key intraday patterns before we get into some daily stuff because it's very unique here. And I want to grab my trend tools out here. Once we started to sell here, folks, we just basically stayed in a downward trend all day. There's not one day we got above, not one period here we got above this 20 moving average. And that's a beautiful thing to look at. And we always talk about technicals and how it's easier to read these technicals than anything else. And if you can follow the technicals correctly, intraday or on the daily, you will be a step above every other person out there that doesn't follow the technicals. So check out this trend. So here's the sell-off starting. And now let's just talk a little bit about this trend right here. Let's connect these right here. And again, it coincides right with that 20 moving average right there. And now let's connect the bottoms right here. Alright, right from about there. And you can see right here. Actually, excuse me, let's redo that one there. In fact, if we do it from the top, we really got to do it from this point here. You can see, connect that to the lows there. You can see that essentially you had a parallel downtrend all day long. Now you can see right here we bounced to the trend, sold off. Trend, line, sell off to the downside again. Just all day long. I mean, inside this channel. And there was not one point ever since basically 9 o'clock when this channel started. And look at this, 9:30 right in here. There's not one point in the day where anything changed. It was a constant buy program or a little buy pressure right to that line. Sell, buy, sell, buy, sell. And it stayed in that, which is fascinating when you get into the technicals of a chart and how you can play that intraday. Now that chart can come into play on the daily too. You can have charts like that for many, many weeks on the daily as well. And we're going to look at the daily here shortly. What I want to touch on first, though, is where could this market go? Very bearish pattern, and I want to show you the NASDAQ on the daily. Ugly sell candle here. We were sitting right on that 20 moving average after closing above. Notice we never got a confirmation move above. So this is what I really want to point out here on the NASDAQ. We always talk to you guys about how once you get above a moving average, you need a confirmation move. That's so key to confirm that move up, because sometimes they'll fake you out and they'll get all the amateurs to jump on the long side in the market here. Now, we had said this is the key here. Do we stay above and consolidate to the sideways before breaking up, or do we sell off right below that 20 moving average again and close below? And we never took out the high of this candle here, the green candle that closed above. Never once did we take it out on the NASDAQ. Instead, we sold on we sold on Monday, and here's Tuesday, and we are now sitting right in line here at a near-term support area, in my opinion, on the NASDAQ. All right. Now going back to the S&P futures here on the intraday, let's take a look at the intraday. I want to quickly show you the 60-minute chart here. So we're going to flip to the 60-minute really quickly here and take a look at this area. And this is the chart now on the 60-minute, how it looks. And you can see we had that big fall and then just consecutive selling candles all the way down. And let me try and clean this up just a little bit here. All right. There we go. A little clearer for everyone to see. Now, again, what the key is here, check this out. So this is where we are, and the next support level on the futures that I'm seeing is not that far below. So we are coming into some support, and that support area is right at these lows. So I drew a line from where we are now, and this is where we could go, and it really is not much further down. It's about, give or take, 5 points or so to the downside right here on this next line, which could be the next sell area, and then we're going to hit some support. So we are near some near-term supports in this market, and the question now remains is this just a beginning of a sell-off to the lows? And again, let's look at the SPY here. All right, on the daily, we want to check it out now. So the question then becomes, here again is the support that I'm seeing on the chart. All right, this is a little near-term support right here. We could find some support right in this area. And the question remains, do we start to bounce back above that 20? Do we continue down to these lows? If we break this line right here on the SPY, which is around 133.70 or so, give or take, that's a rough estimate just from looking at this chart. But in my opinion, excuse me, that's actually that line. Let's see here. That line looks to be about 132.50. In any case, if we break that line, you could easily see the lows right here, if not lower. So we have to be very careful. This market's hanging by a thread. All right, we got some decent earnings after the bell by Disney, by JDS Uniphase, JDSU, but those aren't big enough companies to really influence the market, in my opinion. All right, so yeah, there's decent earnings on Disney, DIS, and JDS Uniphase, but they're nothing in comparison to anything like a Google or a Microsoft, and they're not going to have any type of real effect on this market. So ultimately, we're in a week right now where the Fed has blown its bullets. It's already shot all its bullets out here. They've cut rates 1.25% in the last couple weeks, and they're done. Well, we have no economic news now, major economic news coming out over the next week either, in the next few days here. So that's done. We have no major earnings. We got Cisco tomorrow after the bell, which is for tech. That's a medium play. That's among the bigger players there. Cisco, a good report from Cisco may buoy tech just a little bit, but they'd have to blow away numbers to the upside and say some positive things. I just don't see that happening. Now, I don't think they're necessarily going to drop because the Cisco chart here on the daily is very, very oversold. So as you can see here, you've had a Cisco drop all the way down here. So I don't know. I just don't see a lot of downside or upside, maybe a couple dollar downside or upside, but nothing major on that chart. So again, what it comes down to is, well, what's the catalyst in this market to save this market from going back to the lows? Unless we get a government bailout of some sort, I just don't see it. So that's essentially what it's coming down to, folks, is that we're basically sitting on these indexes in various areas where we're on key supports. And I want to show you something about the Qs that worries me quite a bit. All right, here's the Q chart. All right, this is the QQQs, the NASDAQ Trust. Basically mirrors the NASDAQ 100 here, or this is the NASDAQ 100. It mirrors the NASDAQ and a lot of the companies in the NASDAQ quite a bit. But what you're basically seeing here, folks, and this worries me a lot, the Qs closed today. The closing point here is the lowest close going back to, I think, March of 2007. So notice, yes, we were below, but we never had a close lower than where we closed today. So in a technical sense, that's a bearish close on the Qs. All right, and again, to just repeat that, today's close on the Qs was the lowest close we've had since about March of 2007, right in that March area. So if you almost have to go back a full year to get a close at this low. And again, yes, we were lower here, but we never closed. Here we closed here, here we closed here, and here we closed right in this area here, never as low as we are now. And that does worry me. Now, Apple Computer, Research in Motion, Baidu, all down today. Google was the one bright spot out there, and Google was up, and that is a bounce because Google has just been hammered. Look at this chart on Google. Just unbelievably hammered, and today finally got a bounce. Even with the NASDAQ down 73, it was good to see Google bouncing up here. All right. In any case, folks, it's in a limbo period. As far as I can see, these charts are telling me that there's some major problems going on here. I just don't see a catalyst. But if we break down from these levels here, and this level on the NASDAQ is right here, if we break this and close lower than where we are now, and again, this is the tail right here, then it looks like we're going to head back here. Now, the only thing I can see out there is maybe some positive words from the government on something insurer-wise, maybe a buyout of one of these bond insurers, something to catalyst this market and give it hope. Otherwise, today was a very nasty sell-off, and we got to be negative on there. Again, we are at supports here. Keep that in mind. So we want to see continuation to the downside if we're going to keep on going lower. If we bounce up and they hold the supports, that's going to be a key, and we could move up a little bit from there. Have a wonderful day, guys. We'll talk to you tomorrow.